Moving on then, cryptocurrencies, they crash for a second straight day and Bitcoin hits the levels not seen since November 2020 as popular crypto exchange FTX collapses. That's a big news from the cryptocurrency market, and Manisha Gupta is here to tell us all about this important development. Manisha.
For the last 3 days, we've seen a constant decline come into these markets. The global market capital is now below $1 trillion. Bitcoin is trading at a 2-year lows. And Solana clearly has been the most hit cryptocurrency, down by 45% in last 24 hours itself. You know, the cryptocurrencies have been declining, but all hell broke loose after Binance FTX deal got scrapped. FTX issues are beyond our control or ability to help is the statement that Binance gave out. And it also said that financial documents and illiquid balance sheets is what really led to it. It clearly has been a lot of drama on Twitter in the last 48 hours that we have seen here. It has been about mishandled consumer funds, alleged US agency investigations there. Apart from that, FTX also provided derivative products without approvals from any of the regulatory. It clearly is a time that regulations, compliance, audits perhaps were made compulsory into this area. It's something that we haven't seen at all. This is a report card of what the cryptocurrencies have done on a week-on-week basis. This is most important because the last 3 or 4 sessions have seen a very sharp decline. 25% of a decline is what we've seen in Bitcoin and Ethereum. Cardano is down, Dogecoin down by 42% in last 1 week. And the major declines, as I have been saying, coming in for Solana. And for the year as well, 91% of the value of Solana has been wiped off. This is exactly what the cryptocurrencies have done in this year until now. So it has been about FTT, which is down by nearly 98%. That is the native currency of FTX. And the other has been Solana, which has seen a huge sell-off. The reason being that the FTX sister concern Alameda balance sheet holds Solana in a very big way. Whether it is about unlocked Solana, locked Solana, collateral Solana, there's a huge number that the balance sheet holds there, and is the reason that you have seen a sell-off coming in from other investors as well. Not just this exchange, but the decentralized exchange DYDX also has placed Solana in close-only mode, meaning you can't take new positions. If you are also already holding a position in Solana, then you can wind that off. Crypto.com, which is a centralized exchange, also has halted Solana-based stablecoin deposits. We have seen this come in from other exchanges also. OKX also has delisted Solana. It says that they will stop listing new options when it comes to Solana as well. So this is one cryptocurrency which was doing immensely well in last month or so, but has seen a very sharp decline in last 3 or 4 trading sessions. Well, this is what the Sam Bankman, which actually was seen quite highly of, has said. He said it out a couple of days back on Twitter saying that they need $8 billion to continue to operate or would file for bankruptcy. But clearly the help did not come, and we have seen a very sharp sell-off coming in for the FTX and FTT, which is the native token as well. The US Department of Justice is looking into FTX after its apparent collapse, is what we understand in the latest news there. Apart from that, Binance has been the top exchange in the world when it comes to volumes. FTX was seen as a safe crypto company. When you look at Sam Bankman-Fried, he was seen as the white knight of cryptocurrencies, and the markets now believe that if FTX can go down like that, then the other exchanges clearly are very, very vulnerable there. Markets were consolidating in the month of October, but after what we have seen is clearly disastrous, and the street believes that the next 3 or 6 months can see further decline coming in for cryptocurrencies unless there is a regulation that is brought in.
All right, that is all of the action playing out in the cryptocurrency markets. Manisha, thanks a lot for that. But with that, let's also